From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for January 5th, 2016. In just a moment, we'll be taking a look at the AUDUSD, the Australian dollar versus the US dollar, for today's trade analysis. But first, I want to recap a couple of the suggestions made yesterday, our first trading day of the new year. First off, here on the GBPUSD, Great British Pound versus the US dollar, we've been studying this downtrend that's been in place for quite a long time, several months now. The currency pair has been moving down. In the most recent days, it's been no different. It's been moving down quite aggressively as it pushes down here towards the 1.4600s down here at the very bottom of the chart. One thing noted yesterday is that this red box over here on the left-hand side is the multi-month low. You can see that coming down here on the bottom. Actually, it's a multi-year low that we tagged down here at the bottom left-hand corner of the chart. We're coming very close to that, so being cautious as we sell towards that multi-year support level that's over here on the left-hand side of the chart. Moving on down to the 4-hour time frame, though, we did see, and I'm going to zoom it in a couple of times, we did see the push underneath the blue shaded area, the 47.16 or so level. We studied that as this historical support here, right around the 1.4720 level. Taking into sells at 1.4720, obviously, have been a decent opportunity as it is now pushed back down to 46.60. I did take into a trade there, took small profits as it took a move back down here to the bottom. I got out of it probably too quickly, but there was the opportunity for profit from 47.20 from the bottom of that support level. Moving on to the USD JPY, US dollar versus the Japanese yen. This currency pair, I did also trade this one, but I'm still in this one. You can see the trade going at the very bottom of the chart. 119.50 was the sell price. Currently 118.90 or so, sitting with about 60 pips of profit on the trade. I've closed some of the profit already and have locked in my stop loss at 15 pips of profit using the trade manager tool provided by provided on the Prodigy members website. Let's go ahead and zoom it down to the 4-hour time frame. Similar situation. It broke underneath the support, the blue shaded area here at 119.50, broke underneath it, rallied, retested, and now we see the next move back down towards the 118.80 level. So if you're in this trade, you should protect profit as I have done. Close some profit, move the stop to break even or better. If it continues to break down through that green shaded area, of course, we'll realize more profit, but this is a pretty significant support barrier between 18.50 and 118.80. I definitely expect that we could see some historical support that could cause this to make a rally back towards the blue shaded area one more time. Otherwise, a breakdown here, we'll look for some more profit on the current trade that we're holding for the US yen. Okay, moving on over to the AUD-USD, Australian versus the US dollar for today's trade. You can see the downtrends in place here. That's not too hard to see on the weekly time frame. The two red trend lines, maybe a little bit more difficult to see the red trend lines at the bottom, but there's a triangle pattern developing here. We discussed that yesterday in the live trade room. Take it on down to the daily time frame. You can see the red trend lines a little bit better. And the pattern that's been ensuing here for this currency pair, a triangle pattern for the past several weeks. We see the rise, the fall, the rise, the fall, the rise, and guess what? Now we're in the fall phase, coming off the top of the triangle pattern, heading back down towards the bottom of the pattern. We've been on both sides of the 100 period moving average, and today we're challenging and testing that 100 period moving average once again. Now that we've seen that wide view, let's go ahead and zoom it in a couple of times. Take a look at that orange zone. That orange shaded area is between 71.70, 71.90. 71.70, 71.90. A breakout clearly underneath there. We'll look for it to continue to pressure lower. We've taken some Fibonacci retracement measurements from the bottom of the last low to the most recent resistance high. That puts the 786 at 71.45, 886 at 71.22, and of course the blue shaded area as the last support low that we see down here closer towards the red trend line. So I think there's still some plenty of room for this to go back down. Even a breakout under the orange zone, we could see 50 to 60 pips out of this trade back down towards the blue shaded area. The risk, of course, is that it breaks back above the orange shaded area. So we want the right timing for the trade to give us the lowest risk and highest reward opportunity, because we don't want this to be a false breakout like yesterday's candle was. We want it to be a real breakout. Let's take it on down to the 4-hour time frame. What I'm going to be looking for is a clear breakout underneath this orange shaded area. I'd love to see an open and close, a single candle body underneath that orange shaded area to give us a clear clue that that area has finally been broken, and then we look for it to continue to go lower. Otherwise, a false breakout could lead sellers into a false sense of of hope and turn right back higher again. So an open and close will give us the most confidence. 4-hour time frame would be the best. Daily time would be even better. It could be even that you could look for that open and close on the 1-hour time frame. I'll be watching for that here on the 4-hour time frame. Open and close underneath 7170 gives us an opportunity to go short. Given the weakness out of China, given the positive sentiment for the U.S. with the interest rate raise, this direction seems like the most fundamentally sound direction to be trading in, selling this currency pair. So all of that leads me to look for an opportunity on the breakout underneath this orange support zone for the Australian dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.